During 2018 to 2023, there were 56 accidents in the airline industry, but not a single one involved a scheduled airline. Not a single casualty. How is it possible? Well, all thanks to the checklist system. Pilots and crew follows checklist at every stage. Why? Because even the most skilled professionals are human and humans make mistakes. That's why checklists help you minimize mistakes and ensure every crucial step is followed. But here is another interesting fact. The checklist system isn't exclusive to aviation. Many industries worldwide have adopted it to reduce errors, enhance efficiency, and maintain consistency. And guess what? The checklist method was popularized by an Indian origin surgeon. Yes, an Indian revolutionized how industries operate globally. This Indian origin and now American surgeon wrote a book, The Checklist Manifesto. In it, he highlighted how checklist can ensure even basic steps are never skipped, align teams to work cohesively, enable better decision-making under pressure. Here are 5 industries that have massively benefited from the checklist system. Number 1, aviation. In 2023, India saw a 25% drop in near-miss incidents, airprocs, thanks to stringent checklists used by pilots, crew, and ground staff. Second, manufacturing. Checklists catch defects early, whether during machinery inspections, worker briefings, or production sampling. Third, finance. Investing without a checklist is like flying blind. Audit firms and financial institutions also rely on checklists to meet regulatory standards. Fourth, HR. HR teams use checklists to streamline critical tasks, posting job ads, onboarding new hires, complying with labor laws. And number 5, healthcare. From patient admissions to surgeries and discharges, checklists have transformed healthcare, minimizing costly errors and enhancing safety. What if you had a checklist that could help you identify promising companies based on practical, easy-to-understand criteria? Well, here is a detailed checklist given in the book One Up on the Wall Street that could help you pick the right stocks. Know the nature of companies you own and why you hold their stock. Categorize your stocks. Example, fast growers, stalwarts, turnaround, opportunities to set realistic expectation. Follow a storyline for each investment. Track key developments to assess progress. Favor small companies that are profitable and have proven their business model is scalable. Look for companies with niches or unique market positions. Avoid companies with unsustainable growth rates, 50 to 100%. Stay away from hot stocks in hot industries. These tend to be overhyped. Be wary of grossly overpriced stocks, even if everything else is going right. Seek debt-free companies. They can't go bankrupt. When buying troubled stocks, choose those with strong financial positions and avoid highly leveraged ones. Consider the price to earnings ratio but avoid relying solely on book value. It's real value that matters. Look for companies that consistently buy back their shares, a sign of confidence. Favor companies with little institutional ownership for untapped potential. Don't rely too much on the CEO's resume or public speaking skills. Look for companies with management holding significant personal stakes, as they often perform better than those led by salary-focused executives. Separate tips from the tipper, even if they have been successful before. Be patient. Stocks don't yield instant results. Watch stock never boils. Spend at least an hour a week on research. Calculating gains and losses doesn't count as research. Treat stock selection as seriously as buying a major appliance. Invest time and effort. When in doubt, revisit later instead of rushing into a decision. Follow this checklist and you will never feel lost while analyzing stocks again. Have you ever used a checklist to invest? Let us know in comments.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.